Good morning. Welcome to the Brew. I'm your host, Lex. Great show today. We have our guest from the CNBC reporter, Paulina Likos, and she's going to tell us a little bit about herself and give us a rundown on some retail numbers. We're excited to have her on this Friday, so stay tuned for the opening bell. Good morning.
Hey.
Oh my God, Molly, and I've got two lovely ladies with me today. This is awesome. Paulina and Molly. Hi, Paulina. How are you?
I'm doing great, Lex. Thanks for having me.
Absolutely. So look I don't want to tell folks about you. I'm going to let you do that because you've had a really cool kind of career here. I think it's really interesting. So I said CNB reporter and I couldn't get that out, but correct me where I'm wrong. Tell us a little bit about yourself first.
Yeah, absolutely. So I am a CNBC reporter for Jim Cramer's Investing Club, and I cover stocks across all different market sectors, particularly technology, consumer discretionary, consumer staples, communication services. So, I'm keeping my eye on, some of the biggest companies in the S&P. And today I wanted to chat about what's happening in the world of retail and how the consumer is faring. So I love talking about all these different topics, and I'm really excited to chat with you guys.
Great.
Today.
Awesome. And then the game plan going forward, I think, is for you to make regular appearances on Friday. We're going to get a little flavor of the week each Friday, and you'll give us a little rundown on what's happening in the markets. That's your expertise, which is awesome. Conversely, not my expertise, which is not awesome. So we are so happy to have you. You're, just a breath of knowledge, which is awesome. So this is exciting. Molly, anything from you?
Yeah, Pauline, you're really embedded in you. It's like tapping a vein having you on here. So it's really neat. You've got a lot of, you're part of a large research team. So you'll be able to get some news before the news, which will be really exciting. And you've been in the game for a long time. So your brain will be a welcomed addition on this show. So thanks for coming.
Yeah, absolutely. Obviously, we in the investing club, we focus on long-term investing, but we also have the strategy is active investing, of course. So I think understanding, we always pay attention what's happening day to day, and obviously I think that's going to really inform your trader audience. So yeah, I'm really excited to join you guys and talk about what's happening in the markets every week.
That's awesome. That's awesome. So I got to ask the kind of the obvious question. I hope this is not out of bounds, but what's Jim like? He seems like a great guy. Is he fun to work for?
I'm so glad you asked that, Lex.
Yeah, he's great. He's really great to work for. Just a wealth of knowledge. He knows, every detail. He reads like crazy, very informed, obviously, and just brings the energy and it really cares about the mission of the investing club. He's just always ready to talk to anybody about stocks. So he always says, if you see me on the street, feel free to come up to me and ask me about things. So
can we, and then let's just put his personal cell phone number at the bottom here, just in case.
Yeah,
that really means that.
Happen. That's not going to happen. Well, that's awesome. So is it safe to, I'm gonna let you do your report in a second, but is it, because I'm so curious, this is awesome. Is it safe to say that your team, are you giving him enough data so that he makes investment decisions? Is that the idea? Or is it kind of interplay of his ideas with your ideas and see where they all meet?
So at the investing club, there are reporters. I'm one of the reporters, and there are portfolio analysts. So the analysts and reporters, we work together. Mostly, the portfolio analysts kind of tell us what they're thinking in terms of which trades to make in and out of the charitable trust portfolio, which has around 35 companies in it right now. It's an evolving portfolio, and for me, I am assigned certain companies. So I focus on, different companies, some of which I'll talk today about. And, I pay attention to the trends that are happening on a daily basis with these companies, how their stocks are performing. And then I, interact on a daily basis with the portfolio analyst to see, hey, how do you think the stock it will perform in the future? What do you think about their latest earnings reports, the latest news coming out of the company? So it's a very collaborative process.
Nice.
But at the end of the day, Jim is the one who makes the decisions on the trading decisions.
I got you. So, and how big is the team? Is it like 50 people? Is it 3 people, or is it a big team? Would you say?
It's a pretty intimate team, actually.
Oh, good.
It's a newer service. It came out, I think, within the past few years. So it's kind of like a startup mentality, but we have been expanding since it first started.
Okay,
and
good.
This is so neat. Jim Cramer was a journalist. He's a Harvard grad, and he was a journalist before he jumped into finance. Is that correct?
Yeah. He was in journalism, and then he got he went to Harvard Law School, and then after that, he started his own hedge fund. And he's been in the business for a really long time.
Yeah.
So he's just a wealth of knowledge.
That's neat.
That's great. Good. All right, Paulina. Well, I'm going to let you do your thing. This is awesome. We truly appreciate it. This is just a real gift for us. I'll let you go to it, and we'll certainly have questions if that's okay.
Yeah, absolutely.
Perfect.
Definitely want to chat with you guys about it too. So one of my beats is the consumer. And so I cover, like I said, consumer discretionary, consumer staples. And so I was paying attention this week to what's happening in the world of retail. There were a variety of different companies that were reporting, Home Depot, Target, Walmart, and TJ Maxx. And we also had key economic data that came out to kind of inform how the consumer has been performing. And those are the retail sales. Retail sales come out on a monthly basis. So I'll start with that. So retail sales for July, they came in better than expected. So it showed that consumers, they're continuing to spend. But I dug into the report a little deeper, and the spending wasn't even across all categories. So what I found was that consumers continue to spend on the essential things. Think of, food, groceries, and stuff like that. But they're kind of being really careful around their discretionary purchase spending. So what does discretionary mean? That means things like electronics, big purchase items, video games, and things like that. So there was actually a decline in those discretionary categories. But in apparel, like clothes and clothing accessories and stuff like that, that was actually up. So that discretionary category is kind of mixed. So that really informed what was happening with the retail earnings. And so I looked at 3 companies, Target, Walmart, and TJ Maxx, and each provided very different earnings results. And I thought this was really interesting. I actually wrote a piece on it. So for Target, they had a pretty bad quarter. I'm looking at my laptop here to look at the numbers. Their second quarter had a bottom line beat, but it had the first revenue miss since March of 2021. Their U.S. comparable sales fell 5.4% on a year-over-year basis, and they actually also cut their full year guidance because of the lower sales trends that they were seeing. And if we go through the report, obviously I won't do that here, but it really matches up to what we saw in the retail sales data. So for Target, their food sales grew, but it didn't grow that much. And their discretionary category, which is kind of like their general merchandise, because Target has apparel as well and different areas like that, declined. And in the webcast, the CEO, Brian Cornell, he said that a lot of consumers, they're spending in the service economy on things like entertainment, dining out and things like that. And whatever money they have left, they're allocating it towards those essential core areas.
Mm-hmm.
And then I took a look at Walmart. Walmart, obviously a direct competitor to Target. Walmart had a stronger quarter than Target, a lot stronger. They had positive revenue growth. It grew 5.7% year over year. In the US, it grew 6.4% year over year, but that was slower than last quarter's sales growth. But similar to Target, Walmart, their discretionary merchandise fell. It was negative, the sales. So now we're starting to see a pattern here that at least for Target and Walmart, consumers are spending on core goods and they're pulling back on discretionary purchases. But we have a third company that we looked at, and that was TJ Maxx. TJ Maxx, for those who aren't familiar, TJ Maxx is an off-price retailer, and they get off-season apparel at really good prices. So they're able to provide good deals to the customers that go in there. And it's really fun to go into a TJ Maxx because you don't know what you're going to find. It's like a treasure hunting experience. But anyway, TJ Maxx reported stellar earnings. Like, they were the star of the retail show this past week, which is crazy. Because obviously TJ Maxx, Target and Walmart are, much bigger than TJ Maxx. But why is that? Why was there a disparity between, Walmart, Target, and TJ Maxx? Well, it's because, and it's funny enough, they just have discretionary areas. The areas where these other retailers perform poorly, like apparel, accessories. They have the home goods, the home division area as well. And they saw an increase basically across all of their businesses, which was pretty impressive. And getting to my point, that's because they're able to provide deep value for their customers. And that's what people are looking at nowadays. Consumers are looking for whatever they're buying, they're looking for value. And we saw that in Walmart as well. People, even in the high, income cohort are going to Walmart to save money on everyday goods. So that's why TJ Maxx performed a lot better than the other retailers, because they're providing these really great value propositions for the high quality merchandise that they're selling. So I know that's a lot, but that's kind of the breakdown of how the consumer has been behaving and what story retail earnings tell about the consumer.
Right. Great, good. You're good, Mo.
Could a retail trader, if they're projecting, could they anticipate that those results would occur when interest rates are going up? So let's say they can't, they normally buy electronics or a car, but they can't because they can't qualify for credit at a more manageable interest rate. Can you anticipate those in conjunction with that? Can you get ahead of the earnings reports?
Yeah, for sure. Because these interest rate increases, they've been going on for the past year. So the Federal Reserve, the US Central Bank, has been using interest rates as the main tool to bring down inflation. So, if you think about it, retail traders, they have to pay attention to the day to day, but also the long-term trends. So the long-term trend here is increasing interest rates. So when you think about it, how is that going to impact the consumer? Well, they're, not going to be able to do things like, maybe they'll pull back on buying big items like a home or a car, because the interest rate obviously is going to make that loan more expensive. Or
Right.
So with that, you're kind of putting your frame of mind around what companies are going to work in this type of environment. So you would think that, okay, maybe a company like TJ Maxx is going to work, because as interest rates are higher, the cost of capital is higher, but also inflation is also elevated. So that's impacting the purchasing power of consumers. So with all of that, TJ Maxx is kind of like, it seems like it's a good company because it provides that value, and it's going to attract the consumer in pretty much any type of environment, but particularly in this environment that we're in right now.
Mm-hmm.
Okay, great. And it said that Prime Day might have spiked these retail numbers that were coming out. Did TJ Maxx have anything like a Prime Day? Do they have, an initiative to pump up sales?
Yeah, that's a really good point. Amazon, the Prime Day did have an impact on the retail sales, especially on the e-commerce side.
But sorry to interrupt. For the record, I never knew what Prime Day was. Apparently, so just so everyone knows, because I didn't know, once or twice, I think 2 days out of the year, everything goes on lightning sale, and everyone stores up their basket. And when that Prime Day comes, they just hit purchase and sales go through. So that's what Prime Day is.
Yeah, and actually, Amazon announced another Prime Day for later this year. I think it might be October. Don't quote me on that, but they announced another one. They usually just have one annual Prime Day, but it was so successful. It was like a record Prime Day. It was 2 days in July 11th and 12th. But TJ Maxx doesn't have a Prime Day or anything like sort of related to that. It's like they just have these store locations, and they get off-season apparel and different items from these big box retailers. Think of like a Nordstrom or like
Lex. I hope you don't mind. The girls are going to talk shopping for just a second.
I think I feel that way. This is where I carry all the packages and go sit over with the. I love that part.
Okay.
Perfect. Sorry, Paulina.
TJ Maxx is so great. Like I said, you really don't know what you're going to find when you're in there, and that's why people love going there. I mean, you go in there to buy t-shirts, socks, whatever, and then you come out with like 5 dresses or something.
Right. Or it's true, Lex.
That's me, by the way. I actually love. By the way, for a dude, I love TJ Maxx.
You do?
I do. But, I also like the Home Goods, which I think they own, which is better because it's more stuff. And I like, I love glasses and I love martini glasses.
Right.
Yeah. No, that's awesome. And I have a question. So I don't want to get political, but Target had a little political issue. Is that part of their badness? We don't have to get into that specifically, but is that part of what happened here with Target?
I apologize. I'm not sure what happened. Could you just
well, they had no, I don't want to talk about it.
Okay, never mind.
Yeah. So is that part of the outlier with Target? Do you think, Paulina, or is it just something else?
Yeah, I think that definitely had an impact to it.
Yeah.
I think it was the Pride stuff.
Yep.
So yeah, that did have an impact. I'm not exactly sure how much of an impact it had, but it did impact sales, and we saw this with Bud Light, with Anheuser-Busch as well. It was a huge ding to Bud Light, and that it's just the markets at play here. What happened as a result for Bud Light? You had other companies like Moore's. What is the company called? Moore's. The Miller Lite, the company that has the light.
Molson, maybe is it Molson Golden?
Molson Coors and Constellation Brands that has the Mexican beers. They took a huge amount of market share from the beer market. So that's just what happens in the market. People pick and choose according to their preferences. But for Target, yes, that did have some sort of impact.
So would you say, I mean, I think you mentioned this, but I just want to be clear. Are these surprising earnings to you relative to the the interest rate climate and everything else that's going around the the whole retail? Are these surprising to you, or is this kind of in line with your what you were thinking?
Well, throughout this year, analysts have been anticipating a slower earnings season, just because we're in a really difficult macroeconomic environment. Things have been slowing down, so it was expected that it wasn't going to be, definitely not a blowout quarter or anything like that. Because if you think about it, the consumer has been pressured, but they've been showing resilience. Why are they pressured? They're pressured because inflation is still pretty high. And that's eating into their purchasing power. So that means that it costs more for them to buy things. So, which is why they're careful around what they're buying and why they're seeking more value. At the same time, you have higher interest rates. The Federal Reserve is not at, it's not getting inflation close to its target quite yet. So it's likely that they're going to continue with that. All of this is putting pressure on the consumer, but the consumer is so important because it's really carrying the economy right now. It represents, I think, a little more than 70% of US economic activity. So that's why this week is so important, because it's showing how, these major companies in the US economy are performing, and it's kind of also giving us a gauge around the health of the economy as well.
Which is much, I agree. I think you said it earlier. I think it's much stronger. The economy is much stronger than I would have expected. With this environment, it's amazing. And I just say, from an empirical standpoint, I go out to dinner a lot. It's amazing how many people are packing these restaurants. And I was just in Chicago last night, and it's like they dropped $1 million bills from the sky. It's crazy. You can't get into a place. It's amazing. It really is.
And on that note, credit card debt is at an all-time high, and it's at, I think, over $1 trillion at this point, Q2 2023.
Yeah.
So how is that? How are you monitoring that as far as retail purchases? How does a retail trader go look at this, research? Are those coming from savings, or is it a credit bubble that's approaching?
Well, so I was listening to the CEO of the National Retail Federation speak this week, and a reporter just asked that exact same question, Molly. She was like, but consumer is resilient. That's the narrative here, but credit card balances are rising. And he said something interesting. He said, well, yes, that might be the case, but the important metric to look at here is delinquencies. And the consumer delinquencies are at an all-time low, if I remember, for the past 20 years low. So I think that kind of explains the situation there, which is positive, that consumers aren't defaulting on their credit. So again, it's another rosy part of the picture.
I think probably a good thing to look at is to see the ratio of variable to fixed rates on any debt, and then you can see if it's going to be manageable as the Fed tries to meet that 2% target for inflation.
Yep.
Yeah.
So, Paulina, do you? I'm not going to obviously hold you to this, but are you anticipating more Fed intervention here? We're going to get
Great question.
Another bump, in your opinion, or maybe not? What are your thoughts there, if you have them?
Well, the only thing I can say to that is what the Fed has said. I mean, their goal is to get inflation down to its 2% target, and we're just not there yet. And it's been using interest rates as the main lever to get to that point. So I think that the Fed is going to continue its rate hiking cycle until it gets there. I'm not sure, how long that will take, if they decide to maybe pause and see how their interest rate hikes have been going. But I think that it's likely we might see an interest rate hike, at some point again, until inflation gets, lower.
Right. Yeah. And we're at what? Inflation's about 3.2-ish, I think, percent, thereabouts.
Yeah.
Right? So got a little bit to go to get to 2.
Yeah,
for sure. Great.
Awesome. I love looking at that North Dakota bank. It's a state-owned bank, and they've really weathered any inflationary storms, and they grew 12% in the 2008 crash. And I know So I'm looking into that because I think that's a really neat alternative. I know you had a background in Fannie Mae. Is that correct?
Yeah, I worked at Fannie Mae for a few years.
Which is neat.
Yeah, the mortgage industry is the housing market in general is the one of the bedrocks of the U.S. economy. So it was, I was pretty young. I never purchased a home, so I was thrown in the mortgage industry, and I didn't really know what it was about. But it was a fun time for sure. I really enjoyed it.
Right.
And they're on the news today. So there was just a settlement, I think, that occurred.
Just a little settlement, right?
Just a little settlement from back in the day.
That's all right.
So
okay. Well, good, Paulina. I know you're busy. We appreciate the time. This is awesome. So this is an area of the world that I can certainly say that I'm not very good at, and you're an expert. So we love having you. And I think you're going to try to show up every Friday for a few minutes and give us a little rundown on the week. Correct?
Yep, I'll be here next Friday. I'll think of another topic to talk about. There's always something to talk about.
Oh, there's always something. Yeah.
For the end of the week to kind of tell the story as to what's been happening throughout the week. So
and we appreciate that.
I bring up the Fannie Mae thing because collateralized loan obligations are on a big topic, hovering, and that bubble. So it'll be really interesting, since you have an experience in as a risk strategist, to look into that down the road. And I'm so excited to have you here Friday, right, Lex? It's going to be great. So thanks, Paulina.
Yeah, this is great. So I'm looking forward to it. This is awesome. We appreciate your time and all the great info. So
absolutely having me.
All right. Well, have a great weekend, Paulina. We will see you next Friday.
Great. See you then. Have a good weekend.
Okay.
Bye,
too.
Paulina.
Thank you. All right. So Mal, you're back. That was awesome.
Back.
Isn't she wonderful?
She's amazing.
So much.
She's really, I just want to say, she's really kind. I feel really, it's really nice to have on a Friday morning. It's great to have her on the team. So it'll be good.
Yeah, her perspective is terrific. I love it. And again, that stuff, but I don't. I really like hearing about that. And what I think I want to try, in weeks to come, is let's get some data when we get it from her, and then we're going to work on a trade, maybe a retail trade.
Love that.
To kind of go there, right?
That goes to, it's great to know all this stuff, really great, but how do you actually act on it? And how does all retail traders hooking up together, how can they actually drive and change the market?
Yep. All good stuff. I think, and I'm just going to keep harping on this concept. We need to keep looking for edge for the retail trader, because it's not in that bid ask. That's negative edge. So we need to come up with these sort of ideas so that it says to us, hey, this is a reason to get long, short, indifferent. And anytime you have that mindset, you can come up with an option strategy to take advantage of it. Right. So,
And there you mentioned yesterday, one of the best strategies one could possibly do on the table is a no strategy.
Oh, I told you that yesterday.
Can you speak to that a little bit?
Well, yeah. So here's the crux of all this, right? When you're looking at strategies, okay, you're either going to be, you can be very neutral with the strategy. You can be long, short, but you can also have long premium and buy things, or you could sell things, right? Net sell. So you get credits or debits for things. Those all have repercussions on the risk profile. So you need to also, when you get your idea, take a look at where implied volatility is as to whether or not it's a good trade. We're going to look at one right now with the Trade Hawk machine. And we're going to look at our role. Did I share this? I probably didn't share it. I'm sharing it now. There we go. Okay. Can you see this, Mal?
Absolutely.
Okay. So here's what I mean by this. I don't know if folks remember when we put on the 90 lot, right? Hang on. Let me find it. It's here somewhere. The 90 lot covered call or collar. We bought puts We sold calls, right, to cover our stock position, right? So we had about 9,000 shares. So that's why we chose 90 to do this. So if you remember here on the screen, what we're seeing, I hope you can see my mouse. We sold these calls, right? We bought these puts, the 165 put sold the 182. Look where the at the money line is. It's in between the two. That's beautiful. Great. We did our job with our hedge. Now let's see what the hedge made for us. So you can see right here, this is the hedge. It's the Apple collar for the stock position. That's what I called it a week ago or so. We sold it at 26 cents, that combo. So we got a credit for it. The stock behaved. It did its thing. We didn't have to panic, do anything. We made $2,500 on that trade. So that trade goes into income for us, right? And we can put that in the bank, and it's enhancing our stock position. Don't forget, the reason we did this in the first place is to protect our gains in that stock. We have massive gains, and we are protecting for a downturn in that stock. Lock in some money, and you can choose what percent you're going to lock in by where these two strikes lie. You can do the mathematics of where the current stock price is minus the two strikes, right? And figure out what percent you're saving for. And we'll go through that on the Remarkable another time because we're running late here today.
Yeah, you had a great example, just to talk about, you had a great example that if you're looking at a caller, owning the stock is like owning a house. Placing a call on that is collecting rent, and then a put is home insurance. So you really navigate.
Yeah, that's about it. That's good.
That was a great
I like
analogy.
Mal. I am going to give you a gold star today. You get a gold star. That was good. I really like that. Very good. Now we're going to leave after this. I know we're late. So today's expiration. These are expiring. I won't be protected come Monday morning. So I need to roll this. Roll your boat. So what I did is I'm buying these in. They're only a penny. I'm selling these out, and then I'm moving this whole spread out into, where am I moving it? Into September 1. So I'm doing the opposite out here. And I'm looking to get that same neutralish credity thing for the next month. Or in this case, I'm going out 2 weeks, I should say, right? So I've chosen the 82.5. It's about 37 cents. I'm purchasing the 160 put, about 32 cents, 33 cents. I get a little bit of a credit there, and I'm protected again. Go ahead. I'm sorry.
And you don't roll out further because then your capital is locked. Is that correct?
You know what? It's a good question. I was going to roll out to August 25th, but it was pretty lean. So I decided to grab 2 months because volatility is pretty cheap. And that's the next part of the last part of the equation here. Because I'm buying and selling things, I'm fairly neutral. But if you notice, I'm not getting a lot of premium on the sale side. Now, it goes both ways, right? If volatility is higher, what I'm selling is great, but I still have to buy something that is also high. So, these kind of things, great to have big, huge, juicy credits in here to kind of make more income on this, right? Yeah. But we're not getting that. So you got to be a little careful. And if you look at implied volatility, it's up here in TradeHawk in the September 1st. Implied volatility is 22.65. Okay, I just know that's really low for Apple, and I can go to the volatility department and show that it's just a low number. So I don't want to get short a lot of premium here.
What's a number someone's looking for?
Well, the average on this is probably in the 20-25 range. So it's a little bit beneath beneath the longer term historical average of that implied. Okay. And we'll break all that down in another show, but it's and TradeHawk can show you that. So it's really important to kind of do that little study, because that way it could take you to the point of, maybe I don't want to do this trade. Maybe I want to do something different that takes advantage of a longer premium because it's so cheap. Got it. Right. But in this case, we're neutral. So we're pretty neutral here, and we're going to roll it out. I'm gonna hit the send button in a second. I can do this whole package for a 4-cent credit, I believe. Right. And then when I send it out there, am I doing this right? Oh, look what I did wrong. I didn't put the 90 out there. Got to make sure it's a 90 lot, and out it goes.
Which, by the way, is a great example. When you're using TradeHawk, it really helps and guides you to make sure that you haven't forgotten anything. So that's a really neat feature.
Terrific tool. I love it. It's awesome. So that's in the marketplace. We get filled. We close our front month, roll it out to two more weeks, and now we can sit tight for a couple more weeks with that protection. Anyway. That was a great show. I love talking to Paulina. That's going to be awesome on Friday. She's going to give us a nice perspective.
She was good.
Yep.
She was really good.
So I think that's it for me, Ma. You have a great weekend.
You too. And I'd like to
Wh-
say happy anniversary to Lex and his wife.
Oh, thanks.
She is
Thank you.
just, no one knows, but she's actually a gorgeous bombshell. So we just want to get that out there. And, yeah.
Thank you. Thank
So
you. Very
happy
nice of you.
anniversary.
Yep. Thank you. Well, you guys, you have a good weekend, and we will see you Monday morning for another
All right.
week of The Brew. That's it.
Thanks, Lex. Bye.